David Moadel, welcome to the podcast. How's it going today?
I'm good, sir. How are you, Etienne?
I'm just curious to know, where exactly are you in the world right now?
I am in Florida, USA, where the
Nice,
weather's
nice.
nice and it's a little crazy over here. Crazy times in the USA, but we're all dealing with it.
Oh, yeah, yeah, of course, of course.
Yep.
Cool. So usually the first question I like to ask my guests is, what is one quote that inspires you?
Sure. I have a couple of Warren Buffett quotes because he's one of my heroes, Warren Buffett. The most successful investor of his generation, Warren Buffett. He said a few things. First, he said, "Buy when there's blood on the streets." That's a very popular quote that a lot of people have heard. Easy to say, hard to do. I try to teach people one of the most difficult aspects of trading and investing, which is emotional control. People say buy low, sell high, but few people actually do it. And I help to train people not to freak out, not to get scared when their favorite stock or a good company is down. All right. And so that leads to another quote from Warren Buffett, which is, "I buy great companies at a good price." All right. Again, easy to say, but how many people actually do it? So those are some of my principles that I follow.
Mm, cool. So what's going on these days exactly in your life? What are you up to?
Yeah, I'm putting out video content, maybe not every day, but pretty close to it. And Etienne, you've seen my videos, and I'm glad you have. And I've seen your videos, which are excellent. Everybody should check out Etienne's videos. I mean, they're so fantastic. They're so real. And like you, I try to relate to the average retail trader as well as the more experienced investors with some years under their belt. Okay. I also interview some of the best investors and traders in the world.
Cool. So tell us a little
Yeah.
bit how you started to trade exactly. How did you get in trading in the first place?
Yeah, my father, who is now 83 years old, almost 84, I believe, he was trading long before the internet was in people's homes. Okay, back in the days when you had to call in to place your trades, and I'm sure Etienne, it was very expensive to place a trade. 30 years ago, 20 years ago. Nowadays, brokers are what, $5, $5 US per trade. It's amazing, and you could do it with the push of a button. But my father has seen it all. He's done it all, and he taught me when I was much younger how to trade or how to invest, how to be patient. That leads me to another Warren Buffett quote. Sorry to inundate you with quotes from him, but the stock market, and I'm sure this is true of the forex markets as well. The markets are a mechanism for transferring money from the impatient to the patient. All right. So if you're impatient, you're going to end up, not intentionally, you're going to end up making a large donation to more patient individuals. Yeah. I'm sure you found that out the hard way. I found it out when I was younger. Fortunately, when I was younger and my father started teaching me how to invest, I didn't have much money to lose. So if I blew up my account, it's okay. If I blew up my account now, that would be really awful. So would you agree with that, Etienne, that, the more patient person is the one who wins this game?
Oh yeah, definitely, definitely, for sure. And that's something
Yeah.
that you have to develop over time. Like, there's no other way. I think in trading, you have to develop patience. That's for sure.
Yep, that's one of the most important qualities. I think it's an underappreciated quality. People, they contact me at my email address and they say, "Hey Dave, I want to learn about this indicator, that indicator." They want to have 10 different indicators on their screen. Okay, well, that's all fine and good, but first of all, you can have too many indicators. I think you might agree with that because you get confused. And also they don't know the emotional control, the patience, waiting for a trade setup. I'm very picky. I'm sure you are too. I don't take just any trade setup. If I have to go a few days or even a few weeks and just stay in cash, it's okay to do that. You probably agree with that. I'm sure you do.
Hmm. So how was your experience of trying to learn to trade or to invest? Was it hard, or what are the kind of obstacles you came across, and how do you overcome them?
Yeah, that's such a great question. When I first started, I did what most people do. Maybe you went through this, was buying high and then selling low. Have you been through that phase?
I've been through doing pretty much anything, so yeah.
Yeah, that's the part where you lose money. That's the part where you jump on the bandwagon last. You're the last person of the party. And you don't want to be the last person of the party because, all the beer's gone and the food is stale and there's hardly anybody left, right? If you're desperate, or, it's kind of like I had to learn how to wait. Again, patience. So instead of buying low, I would buy, somebody would tell me about a hot stock. And instead of listening to my father like I should have, I was young. I wanted to do my own thing, I wanted to be different from my dad. So instead of listening to his advice, which is to wait until my favorite stocks were much lower, what I did was I would buy I would take a hot stock tip from a coworker or a friend or, another family member, which is a terrible idea in most cases. And I would buy after a stock went up 8 days in a row, let's say. And at the end, I think you know what happens after that, right? Right after you hit the buy button, what happens?
Wow, yeah. Opposite direction.
Stock turns right. It's as if it feels like they know. It feels like the market knows when I'm about right when I hit that buy button. It's like they're watching me, right? You ever get that feeling? For people listening to this, watching this, know that feeling. And then immediately you hit the buy button and stock starts to, like a roller coaster, when it gets to the top, starts to slow down and then zoom. Mm-hmm. Now what they say, stairs up, elevator down. Stocks, and probably this is true in the currency markets as well, they tend to go down faster than they go up. Isn't that probably true most of the time?
Yeah, it depends because you have both direction Forex, so kind of different.
There is panic buying, sure, but panic selling is a sight to behold. If you were not trading in the year 2008 or 2001, not just in the U.S., but our crashes pretty much affected or infected the whole world at the time. Would you agree with that?
Mm-hmm. So, what are the obstacles you had to overcome to learn to trade successfully, and perhaps what have you done that other people could apply?
Getting a mentor. And for me, it was my father, and then other mentors through, reading books that helped a lot too. Reading, The Intelligent Investor by Ben Graham, things like that. Learning about buying when there's blood on the streets. And I know that's a violent phrase, but it really is true. When other people are afraid, when a really great company has gone down 8 days in a row, not gone up 8 days in a row, that's when you have to get in. But you have to train yourself to do that, because I don't think people are naturally wired that way. I don't know if you agree with that or not. I don't know if the audience agrees with that or not, but I think we're naturally, we're wired to follow the crowd. I think that's what we normally do as humans. That's probably how we survived for all these years, all these centuries and millennia. But now we have to kind of work against our nature a little bit. And, when everybody else zigs, you want to zag. If most people are going left, you want to go right. Because 90% approximately, I've heard this at least, 90% of retail traders fail at it. So if almost everybody agrees that a trade is the obvious one to make, you probably want to go the other way. So that's what I had to learn to overcome that. I had to learn to study. I had to learn that this is work. It's a job. It can be fun, but trading, if you're going to do it for a living, investing, if you're going to do it for a living, it is a job. It is not. It can be very profitable. It can be wonderful. I've learned about world economies. I've learned about world politics. I've learned, I've gotten to speak through my interviews on my YouTube channel, which I hope everybody will check out. I've gotten to speak to amazing people, including yourself. I mean, this is really a privilege to be able to do this. But I had to work for it. When I was much younger and inexperienced, I thought this would be easy. I had to overcome those barriers, those mental barriers right here in my head. The problems were not the market. I was blaming the market back then. The problem was me. It was always me.
And I've seen that you talk about trading and investing at the same time. So do you consider yourself more to be a trader or an investor? And why would you go more with one than the other?
That's a great question. I'm both, really. I allocate some of my portfolio toward position trading long term, which would make me an investor. But then I don't mind taking short-term trades. I can day trade if there's a really great setup for it. Like, for example, yesterday in the markets, in the U.S. markets, I'm sure volatility spiked a lot.
A big setup,
Yep. The VIX went up for the first time in a long time. There was fear in the markets, and that's a great time for a day trade, or at least an overnight trade. You can short UVXY or TVIX or VXX, pick your choice. Just make sure you have a great broker that can locate shares to short. And then if, hold on to that for a day or two. And guess what? The next day, which is today, people have calmed down. The VIX does not stay up for that long usually. And so I'll take a day trade or a short swing trade if the setup is really, really great. I'm very picky, as I said, because I'm very patient. But I'll also hold things for a long time. There's nothing wrong with holding some gold, some silver for a long time. Cryptocurrencies, whatever it is. Currency trades, which I know you're a specialist at. Right now the US dollar is really down. Will it go down more? I don't know. The United States government keeps printing money, so it might go down more. But if it goes down enough, I might buy some UUP, which is the American dollar ETF, and just keep it in my portfolio. Just hold on to it. And I think precious metals are almost always a good thing to buy, especially when they go down, and you can hold on to those for a long time and feel pretty safe about it, because gold and silver, they don't have earnings reports, okay, that you have to worry about. Gold and silver have been around a lot longer than you and I have, and they're not going to. It's not like a business that can go out of favor, or I mean, gold can go out of favor, but it's not like it's going to go out of business. It's gold, for goodness sake. It's silver. It'll always have a use, at least within our lifetimes. So I'd say on both, a little bit of each.
Cool. I think you mentioned a key point, which is a great trade setup. What do you consider to be a great trade setup? And does that imply indicators, some macroeconomic figures, or what is it exactly?
Yeah, I hope people are considering everything, because when I coach people, I train them before they even look at the charts to look at the fundamentals if it's a company. And actually, you can look at the fundamentals of gold or silver as well, or the dollar. It's different. It's not like the fundamentals of a company. It's more like looking at the political situations around the world, supply and demand, that kind of thing. But if it's a company, you look at the fundamentals. How long has the company been around? Things I already talked about. Does it have great leadership from a visionary leader? Do they have earnings beats or earnings misses? Okay, everybody has earnings misses, but what do they have more of? Hopefully earnings beats. What is their PE ratio? And again, that depends. I mean, if Amazon has a high PE ratio, I don't mind so much, because their earnings are so massive and they're so dominant in the niche that they're in that maybe I don't mind it so much. So PE ratios are relative, but I do look at it and I take it into consideration. Is it a good company? Are they a leader in the niche? Are they a well-known company? And how long have they been around? The leadership, all that stuff. And then only after studying all of that do I have my coaching students look at the charts. And I teach them about Bollinger Bands, okay? I teach them about I teach them a number of indicators so they can choose their favorite, because there is no best one. I teach them about RSI, all right? I teach them about stochastics, MACD, all of those. In Forex, let me ask you this. Do you have, for Forex, is there an indicator that is really preferred for Forex trading?
I guess the biggest thing with indicators, and that's like something people never get, is that you have to apply the right indicator at the right time. You cannot just pick any indicator and like work your way with that all the time. It's not going to work.
Yeah. Yep. So that's then what's true in stocks and options, which I mostly deal with. Stocks, options, cryptocurrencies, and I'll work with Forex as well, sure, because the principles, I think you're telling me that the principles are the same.
Principles are very similar, because it's technical analysis in the end, so yeah.
Technical analysis can apply to all these things, but it's just a tool. And you want to have a mentor, such as myself or yourself, teach you how to use it properly, okay? Because otherwise it's just a bunch of lines on a screen, okay? And I teach people things like not having too many indicators, because you get confused. People come to me as a student. They say, "Hey, Dave, I've got MACD and stochastics and RSI and Keltner channels and the CCI index. I've got it all on my screen." And I'm like, "Wow, okay. How do you even know what to do? How can you make a decision like that with all these things? You've got contradictory signals. One thing telling you to buy, one thing telling you to sell. I've got a great idea. How about you and I just go over?" I tell them, "You and I just find a couple of really reliable indicators, maybe a main one and then another one for confirmation, and really learn those deeply, instead of superficially learning 10 different indicators all on your screen at the same time." I think that works better.
Is it the only thing you look for, so an indicator confirmation, or do you look for some of the things in the market, like candlesticks or different things like that?
Sure, you can use candlestick patterns Absolutely. Or, cup and handle and all those, double bottom, head and shoulders. Those can be applied as well. Um, I don't think those are as reliable as some people make them out to be. I'm sure, Etienne, you've seen YouTube videos where people swear by the cup and handle pattern as if it works 100% of the time, or head and shoulders, or whatever. Well, I got news for you, listening and watching out there. They don't work all the time. No indicator or pattern works all the time. Or bearish engulfing if you're into candlestick patterns. All of those, okay. Death cross and golden cross. The problem with these is that they're kind of hit or miss. But it's another tool in your toolbox to use, because if you recognize a pattern, for example, a double or triple bottom, I found that to be pretty useful, because that's just a fancy way of saying that a stock price or currency price has gone down to a certain level and bounced right off of it at least twice. If it's a double bottom pattern, triple bottom or quadruple bottom is even better, because then you've got a real support level, a price below which the market is just not ready to take it. When it gets back to down to that level again, the support level, does that mean it's not going to go down through it? Of course it could. It could go right through it. But we work with probabilities here. If a stock or currency price or whatever has gone down to a certain level 3 times in a row, then when it gets down to that level again and then starts to go sideways and starts to curl up a little bit, yeah, I would say it's pretty safe to buy it there. I'd say that's a good price, but only if it's a great company.
You've of course coached a lot of people in the past. So what are some of the things that you see them doing wrong from the start? We've talked about one, which is having too many indicators, but what are some of the things people do kind of on a daily basis that is wrong?
Yeah, I'm glad you asked that, Etienne. Buying high and selling low, we talked about that. Stock goes up, or currency, whatever price goes up 8 days in a row, 10 days in a row, and then they want to buy it. Because it's got momentum. Well, again, you're the last person at the party. That train has already left the station, and there will always be another train. There's always another train coming. You miss the bus, there's another bus coming 15 minutes later. So don't worry about it. There are 15,000 stocks out there, all right, at least in the U.S. I'm sure there are a lot more worldwide. There will always be other opportunities, okay? So if you miss, and they get frustrated. Oh, but I feel like I'm missing out. FOMO, that one, FOMO, fear of missing out. That's a killer. That's a portfolio killer. Watch out for that. So that's a big mistake that a lot of students make, taking advisement from people who are not mentors, taking hot stock tips from friends, family, coworkers. Now, I want people to take advisement from Etienne and from me, or from whoever their mentor is. Doesn't have to be me. But you have to, first of all, do your own research, okay? Anything, I'm not a licensed or registered investment advisor. Nothing I'm saying here is investment advice. I'm not telling anybody to buy or sell anything. But what I can do is coach people to help them, learn to do this on their own. I'm not trying to make people dependent on me. I'm trying to get people to learn how to do their own research, be their own researcher, because research pays the bills. You do your homework, you get paid eventually. So those are huge mistakes. Other things, just buying highly speculative stocks, things like that. It's okay to buy penny stocks, but that should not be a huge part of your portfolio. If 100% of if you save up $50,000 or $100,000, whatever, and 100% of your portfolio is invested in penny stocks, you may want to reconsider. All right. So you probably want to diversify, have some mega cap companies in there. You can have some mid caps as well, and maybe some precious metals, some oil, whatever, commodities, whatever it is, and some currencies as well, and maybe even cryptocurrencies. That way, if one thing falls, it's not a portfolio killer. It's just part of it. Something else will lift it up.
Mm-hmm. Cool,
Yep.
cool. And the other thing I wanted to get into is the fact that you've talked to many traders and investors in the past.
Yeah.
That's a funny topic because I've also talked with people and I see some common themes, but at the same time, everything looks very different. Like no one is going to be the same, doing the same thing, trading the same way. So what are some commonalities you've seen in those you've talked to?
Sure, great question. And there are commonalities and differences. Speaking to some of these amazing people, around the world, Carl Denninger and David Morgan, Michael Pinto, Craig, Cliff High, Craig Hemke. All these people are so different, they trade different things. Some people trade gold and silver mostly. Some people trade currencies. You're more into the forex markets, but you do other things as well. Some people think the market's going to go up. Some people think the market's going to go down. When I spoke with Louis Borsellino, the well-known Chicago Mercantile Exchange floor trader, the guy's a legend. When I spoke with Kenny Glick, these are guys who think, who told me they don't believe that the market's going to crash anytime soon. They believe that the market's going to go up. Kenny Glick actually told me he believes that the Dow Jones Industrial Average is going to go to 40,000 within a few years. And then I've had people like Lynette Zhang and Greg Manarino. Those are people who are a little bit more bearish. They think that I don't want to speak for them, but they probably are not that bullish on the market, where they think it's just going to keep going up. They may think that it's time to get into gold and silver just to hedge yourself against a possible market crash. So not everybody agrees on where the market's going to go. They're not, like Jordan Royburn, he's more of a metals and miners guy. And then I've spoken with people who are into penny stocks. Jeffrey Friedland, he's a marijuana stock guy. He's the expert on that. And it's wonderful speaking to him. So not everybody is into the same things. And yet the commonalities are, among other things, diversify your portfolio. We talked about that. If 100% of your portfolio is in one asset class, you may want to reconsider, okay? Because any asset class can go down sharply, and then you're stuck. You're holding a bag that you don't want to be holding. You want to have a hedging mechanism, a hedging strategy. What are you going to do if your holdings go against you? It could be stop losses, that's fine. It could be just ride it out, but you want to know that ahead of time, and you have to have amazing emotional control and a strong iron stomach to be able to do. If you don't have the iron stomach or the will to ride it out if it goes down sharply, then know that ahead of time and understand that may not be the strategy for you. You may want to use stop losses instead. Or you can buy put options. If you buy 100 shares of stock, you can buy a protective put as a hedging mechanism. Or you can average down. Some people, it's kind of like the Ben Graham, Warren Buffett school. They hold on to stocks for long, long periods of time, decades even. And if it goes down, assuming it's a really great company, if the price goes down, they're happy to buy more. So that's averaging down. Okay, you can do that as well. Or you can dollar cost average, buying a certain amount at regular intervals. There are many hedging mechanisms, but have one and know what it is ahead of time. All right. And then probably the other commonality is you have to know ahead of time when to get in, when you're going to get out.
Planning process, yeah, that's a big one.
You've spoken about that, and your videos are fantastic about that. I recommend everybody check out your channel and see all of your videos as well as mine. Just look up David Moadel, Moadel on YouTube. Put my name in the box there in the search box, and you'll find me. I've got over 200 instructional and interview videos on stocks, options, cryptocurrencies, even marijuana stocks, everything. So you got to know beforehand. Don't just wing it. Don't just get in. Know beforehand when you're going to get in, and more importantly, know when you're going to get out. I'm sure you have students and followers, Etienne, that don't exactly plan out their exit strategy beforehand.
Yeah. Or either it's going to be planned out, but they're going to react and change their exit really, really fast. Yeah.
They don't stick with the plan all the time, do they? And that's the emotional control, which you and I teach people to do. Everybody wants that magic indicator. There is none. I'll teach you about indicators if you want. That's part of trading. It's part of investing. But the emotional control, because part of being a coach means that we can set up a session where they call me just to not freak out, just to, hey, I bought a stock, it went down 20%, whatever. What do I do now? A lot of what I do is emotional support. It's almost like a therapist sometimes.
But it shouldn't necessarily be that way if people have the right strategies and like the right mindset and the right techniques in place.
Yeah. And once you get those in place, though, it's magic. You can make a lot of money. You can also lose a lot of money if you're doing it the wrong way. I know that in the currency markets, would you agree? In the currency markets, there's a lot of leverage oftentimes, like in the futures, and you can lose a lot of money really fast. Would that be accurate?
Yeah, but once again, like that's another topic. Another problem is that people don't need to use the leverage. if you want to be like smart about trading and trade the right thing, you don't need leverage that much.
Right, right.
So it's only like a shiny object, basically.
Right.
Yeah.
It is like
So let me ask you this: what are some of the best emotional control tips that you have for people?
Sure. Yeah, absolutely. The first is to have a mentor or somebody you can talk to. For me, it's my father, because he's seen it all. He's been doing this for decades, and not just years. And so, and I mean, he was alive during the Great Depression. He was young, but once you've lived through that, do you think a 10% drop in one of your stocks or currency positions is going to phase you? It's going to freak you out? When you've been through, I mean, in the United States, at least, there was a horrendous bear market in the 1970s. 1987, the market dropped, the Dow dropped 22% in one day. So he's been through those. And so, you want to have a mentor or somebody you can talk to during times like that who can persuade you not to do the wrong thing, not to sell at a really unfavorable price, for example. Or maybe they'll tell you to get out. It depends. It depends on the situation. Emotional control also means, like we discussed before, knowing beforehand when you're getting in, and more importantly, when you're going to get out. When you know beforehand, it's less emotional. In fact, you could even place a limit order, a limit sell order with your broker nowadays beforehand, and so they'll get out for you. So even if you don't have time to watch the markets all the time, like a lot of my students don't have time to be, day trading and monitoring the computer or the phone all the time, you can let the broker do their job. That's what we pay them so much to do, right? Let them do their job, and let them take you out at the right time. Now, be aware that's not a perfect system, especially if you use stop losses, because an overnight gap down can bust right through your stop loss. And so you'll be selling at a very unfavorable price. Put options are a little bit better in that way. At least with a put option, there's a contract, an option contract. So you're selling at a certain price no matter what, if it goes, to that price or below. So you have to be aware of these things. Emotional control also comes from experience, just doing this. The first time you buy something and it immediately goes down 10, 15, 20%, it's scary. You don't really know what to do. Again, if you haven't traded through 2008 or 2001, you may not know what this feels like. Worse yet, you may get that beginner's luck, where your first couple of trades turn out great, and then you become arrogant. You become so overly confident that you start putting in too much money into the trade. And, you got to be careful about that. And again, that comes down to proper mentoring. And finally, don't put huge amounts of money into anything, into any one position, any one trade. And that can help reduce the emotions you feel, like the fear and the greed and things like that.
Mm-hmm. Cool. And maybe I'll share just my one tip for emotional control. That's probably like the best thing that helped me. And it's two words. It's walking away. Like not following the stuff all the time. So that really helped me. I think it makes a big difference. Because you've probably seen people who try to follow the market like every single minute, every like 30 seconds. So yeah, it doesn't work. Really bad.
Maybe if you're a day trader and you have to do that, if you're a scalper.
Yeah, of course. Yeah.
Then you have to. You have to kind of be glued to that screen there. But if you're a swing trader, like days, weeks, months, or a position trader, like years, if you're going to be a long-term trader, act like a long-term trader. Behave like a long-term trader. Don't be looking at the screen every 5 minutes. It's not going to help you. It's going to freak you out. It's going to cause you to sell at the worst possible time. Okay. If you're a swing trader, be a swing trader. Behave like a swing trader. And that means look, maybe once or twice a day as a swing trader. You don't have to look every minute. It's not going to help you. And that's such a great tip, Etienne, for emotional control. Walking away, there's power in that. If you're not a day trader, you can walk away from the screen for a while and just think about other things, live your life, and then come back, and you'll be surprised how a few days or weeks later, oftentimes the price comes back to where you wanted it to, and you're glad you didn't freak out and sell at the worst possible time.
Exactly, yeah. Any other things we didn't cover that you would like to talk about? Any lessons you want to share with people?
Sure. Mainly it is, I would say, just buying low and selling high. It's hard to give a lesson over a podcast, because I know some people are just listening to this probably and not watching it or whatever, if it's on iTunes or or whatever. Yeah. But so I cannot really show visuals so easily. But I would say pick a small number of indicators. Ones that are great for beginners are Bollinger Bands and RSI. And that would probably be a good lesson. Go on, let's say stockcharts.com, stockcharts.com. It's free. They should start paying me for all the free publicity I give them. Okay, but go on there and just start looking at some stocks, and put on the 14 period RSI, and for the Bollinger Bands, put on it's 20,2, which means the 20 period, and it's 2 standard deviations. All right. So what that means is that you're going to put it on the normal settings, and this is for the daily candlestick chart. All right. And although you can do this with day trading as well, you can do this with the 5-minute chart, the 1-minute chart, whatever. But I tend to do this with the daily candlestick chart, where each candle is 1 day of price action. And when the stock hits the lower Bollinger Band, again, this is only for great companies that have been around for a long time and have good-looking charts and that kind of thing. When, let's say, Amazon or Apple or Starbucks or whatever dips down to the lower Bollinger Band, you can start to think about buying it. Doesn't mean you automatically do it, okay? But that's when you start looking at it. It starts becoming interesting. And then you look at the RSI. Maybe it's at the bottom Bollinger Band, but it's on the RSI, it's not even close to the oversold area, which is below 30 reading on the RSI. So you can use one for confirmation. Maybe when it gets below, to the bottom of both, when it hits the oversold position on both of those indicators, you start to look at it. And then you ask yourself, why? Why did it go down so much? Remember we talked about how I have people look at the fundamentals of a company and study that before they look at the chart? Because if they don't do that, they're just going to look at the chart. They're going to see that it's in the oversold area, and they're just going to buy it because it's cheap. Yeah. Well, you have to look at the news first. You have to look at the company fundamentals. Maybe the company is genuinely in trouble. Maybe it's being sued by the government. You know what I mean, or whatever. If you're in trouble with the government, that's bad.
Yeah,
okay?
It's gonna be pretty bad.
Maybe there's a class action lawsuit. Maybe you're Wells Fargo, where your reputation has been harmed really, really badly. Okay, things like that. So you have to figure out, why did it go down so much? Is this a temporary, probably, situation? Or is it something systemic, something permanent with the company? If it's systemic and permanent with the company, you probably don't want to buy it, even if the chart looks great, because fundamentals first, fundamentals first.
Cool, awesome. So how can people find you if they want to connect with you or reach out?
Sure. Well, my name is David Moadel, first name David, last name Moadel, Moadel. And you can email me, David Moadel, all lowercase, no spaces, nothing like that. DavidMoadel@gmail.com. DavidMoadel@gmail.com. Hopefully that'll be in the description of the video or of the audio. You can just contact me, send me an email. If you want to put together a trading plan, learn about stocks, options, trading, investing, whatever, I can help you with that. And I'm extremely affordable. If you want to find me on YouTube, I've got over 200 free videos you can watch. Just go to YouTube, type in David Moadel in the search box. You'll find me, no problems. Browse through my videos, leave comments, subscribe. I hope you'll subscribe. And also, David Moadel is who I am on Twitter, and also on stocktwits.com. So, and also on Facebook. So find me. I'm easy to find.
Nice. And David, what kind of goal do you have for the future?
Man, I want to help just like you, I want to help as many people as possible. I want to help the world. I want to help people all around the world become better traders and investors, because a lot of times their college education depends on this. They're, getting the home that they always wanted, or paying their medical bills sometimes depends on this, things like that. So I want to help them plan their future in terms of finance. Okay, again, I'm not a certified financial planner or anything like that, but I can help people learn to do this on their own, so they don't even have to hire a certified financial planner if they don't want to. I'm not telling them not to. I'm just saying I like to make people independent, and I want to help as many people as possible.
Mm-hmm. And what's your main motivation for all this?
My motivation, man, I just love it when people send me emails or call me or Skype me and say, man, Dave, thank you. You've taught me so much. You saved me from doing something crazy with my money. You saved me so much money. You've helped me make so much money. You've helped me earn it on my own. And that is so gratifying to me when people, and then they teach other people. Mm-hmm. I've had people teach their sons and daughters how to do this. So they're passing it on to generations. What could be better than that? It's really amazing, and I'm very blessed to be able to do it.
Awesome. And David, I have a question I ask my guests at the end of every podcast. So if you could give only one piece of advice for traders or investors in one sentence, what would that one sentence of advice be?
Wait for a great trade setup. And if there is none, do nothing.
I like it. David Moadel, thanks so much for being on a podcast. It's been a pleasure to have you here today.
Etienne, you can invite me back anytime. Thank you, sir. I appreciate it.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desiretotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.